Hello everybody, welcome back. Let's have a look at the boring price action, the static sideways price action, which to be honest with you I think is going to be the majority of what we're going to see. If we're going to get any kind of move upwards, it should really be today, but given the closure on Dixie yesterday, I'm going to be I'll be very surprised, to be honest, if we do see a large move, because this implies further upside for Dixie. In fact, it's actually quite a big move for the Dixie now. So, breaking out and closing above all moving averages of significance on the daily, and obviously that just confirms the bullish bias that we were looking at on the 4 hourly. So now we do have a proper breakout on the Dixie. We should expect this to start trending up, and that goes to the idea that consolidation is due for not just Bitcoin, but stocks, indexes, and indices, all the big boys really. As S&P basically draws closer and closer to the $5,000. And most of that was done by Meta as well yesterday, because if you look individual stocks, we were doing it on the stream just briefly. Most stocks were ever so slightly in the red or static, or they weren't particularly interesting, but Meta was up 20%. You can imagine it. So when it comes to Bitcoin, basically it's a similar kind of vibe as what we were looking at on the Dixie, and slightly better if you judge it on its on face value. So on face value, Bitcoin actually does present itself reasonably bullish, I have to say, like relatively bullish. Now we've got a golden cross now that's been confirmed on the 4 hourly, and we're currently trending above all moving averages. More importantly, the center of the Bollinger Band and the 21 exponential, which is basically a little bit close to where we are right now, around 43,000, 42,900, that kind of area. Losing that area would likely come back down to 42,375. That is a golden cross retest, and it's at this point here where we decide really if we are bullish or bearish, because if it's bullish it should get supported on there, and this would be a place to try a long or to buy some Bitcoin, looking for a bounce and a move up from here in standard V-shaped recovery practice. A dip into it, retest it, test its strength, confirm its strength, move back up to the 43,500, and probably, to be fair with you, 44,000. And like I was saying yesterday, not probably, but it wouldn't be surprising to see it even go back up towards these candle body highs, roughly around 46 to 47, which is quite close to the previous local high. But based on what we're seeing right now, I mean, really not much at all is going on for it, and it is basically boring, and it is kind of sideways, and this might be the way that it's going to be for us for a little while. I mean, I was saying it on the stream yesterday. Obviously, everybody wants to listen to somebody or find somebody that's going to give you a call that you can use to then trade from. But sometimes I think the best call is no call at all, because the time frames are conflicting, right? So we've had a really good. So I just want to put it into context. We've had a really good 12, even more months, right, of general upside in not just Bitcoin but everything, generally everything, right? And it's been, for those with patience, it's been hard not to make money over the last 12 months. And for those who have got attention to detail, you've made more money than you've done pretty well. Let's face it, it's been pretty good. Now, the reason I took chips off the table over here, and I say chips, I mean pretty much all the chips, apart from the hodl bags, was because of the ETF and the fact that the money flow index had peaked, all that stuff that I talk about all the time. And I stand by it, really. I do stand by it, because trading isn't just about making money, it's also about not losing money, right? And I'm way more in favor of the larger macro swings, right, rather than the day-to-day trading a 15-minute chart, in here, out here, in here, out here. It's not really for me. I do it sometimes. It depends what the environment's like. But at the moment, if we do swing back up to here, I'm still not feeling it, because yeah, we are resetting, but a candle body closure, and this might sound strange, but a candle body closure on a weekly above 44,000 would confirm significant bearish divergence on the money flow index, and that would be a bit of a problem for Bitcoin, because historically that's how it always finds its peaks. It's also how it also finds its its lows on the larger macro higher term time frames, like a weekly. So with that kind of view, I'm not willing to, buy, even though the charts do present themselves in a way to suggest that we can go up higher by maybe a few $1,000s on Bitcoin. And I really do mean that. It can do that, because I am more inclined to believe that the majority of the price action is going to be seen to the downside over a longer period of time. And that's when opportunities will really start to emerge for what would be a continuation of the overall crypto market cycle derived by Bitcoin and its halving, obviously. I don't think it's any surprise that Bitcoin has a 4-year cycle and the halvings take place every 4 years. I mean, all of this is relatively well established. Then all of these things like the ETF, the halving, and the lowering of rates, which will come at some point this year, is all bullish too. But I don't see why they should have an immediate reaction on the charts. I think all of this has basically been priced in. You'll often find that the halving gets priced in basically a year before it takes place, which is probably one of the reasons we've been trading and trending up for a 12 towards 18-month period, right? Priced in. So it's all priced in. Which doesn't mean that it's not going to go higher over time. It just means that the event is priced in, the rumor is priced in, the news gets sold, and then the reality, the economic reality, the fundamental changes will take the price higher over time as well. But until then, it's a battle. Now, let's have a think about what's really gone on as well. So that from the peak to the low, that was a pullback of 21%. That's a decent consolidation in itself. It's definitely worthy of a bounce. And so far, the bounce has been pretty sweet. From the bottom to the top, it's been 13%. Not too bad. And just to put it out there, I scalped a portion of this as well. So it's not that I'm perma-bearish or perma-bullish. Just felt like it's obvious enough that this would cause a pullback. And we saw signs of life, and we were able to let's take a small opportunity. It was a 5% bounce, but when you're trading with large figures, 5% is decent. And look, we might continue. Like I say, as far as the chart looks right now, it can definitely continue. But as soon as you start zooming out a little bit further, so obviously the daily seems okay as well. The daily's bullish, provided we hold 42,000. Closures below 42,000 to me would suggest a new lower low coming in at some point soon. Momentum's good. Nothing's a problem with that. The 3-day also seems relatively good. Closed the 3-day yesterday, and now what we're looking for. Oh no, we've not closed it yet. Should be closing it tonight. We're looking to see a candle body closure above this level again, 42,700. So it all sort of hangs around the $43,000 to $42,000 zone. Does it say which direction it's going to go in the next few? Well, I suppose over the next week, but. When you start going out in the higher term time frames, obviously we've established the dwindling of momentum here, the potential bearish divergence, or even just the peak on the money flow index, being something of concern, suggesting that even though there can be further upside, it's not the way to find an absolute high. It just tells you when risk is getting too high. I think it was the right thing to do to start scaling out through December, and especially with the ETF obviously marking this peak. But then the thing that worries me even further is the monthly. If you have a look at the monthly money flow index, it's the third highest it's ever been, and this marks two major peaks. December 2017, obviously the parabolic top. We've got April 21, pretty significant parabolic top leading into the May crash, and now we're here, which seems relatively a bit early to be here when it comes to such a dramatic move from the bottom to the top. So with all of this in mind, the higher term timeframes do present themselves in the form of a pending consolidation, but because they're on a weekly and on a monthly, those consolidations might not really start to be seen or felt or even confirmed for, let's face it, maybe even a couple of months. But that doesn't mean that I don't want to preserve my gains. Like, it's all about that, and it doesn't mean that I don't expect further upside over the coming years, as in like later on this year, next year certainly, because that's what I do expect. I just don't want to see any of my gains, which have been significant, get lost along the way. Because you've heard the thing what people always say, you always hear it. It's really annoying when you hear it, but it's kind of true. The real money is made in bear markets, or let's just say we'll call it consolidation, because I think a bear market would be a bit of a strong term to use for what I'm expecting. But yeah, I mean, it's true. It's true. You've got to buy the lows rather than buy the highs, which is basically what this is right now. You'll be buying a relatively high point. It doesn't mean that it's not going to break out and go further, which I will expect between the end of this year into next year. That's what I expect anyway. But how good would it be if it were to come down, monthly money flow index like it suggests, and then consolidate perhaps maybe down to a Bollinger Band center, which is below 30. So it's not much, in the grand scheme of things, but it's enough. It's enough to pull down alts, 40, 50% or more. And that's what I want. And it's not that I've got a bias and I'm fixed on that idea. It's just that, when you've been in the market for as long as I have, sometimes you just got to recognize that patience is the main thing, and cash is a trade in itself. And we've had a really good run, and we've had an exceptional run actually, because we're having a good time on Bitcoin, altcoins. We caught them at their lows, didn't we? We were calling the alt season, October, November, December, sold them out. That was 3 months worth of pretty significant, serious gains out there, which felt impossible before that. People were calling me all kinds of names, similar to how I get called now when I'm saying I'm out for a little while and I'm only really prepared to run some down token bots over over the next few months, really, just to allow for a consolidation to kick in when it does, and I believe it will. And again, the Dixie helps to complement this as far as the first domino falling, because that's often the case, isn't it? That's what generally what happens when you look at the Dixie. It is the first domino to fall. Most markets, if not all of them, are derived from dollar price. And I remember the last bull market was still in full force when the Dixie found a low and started to move up and started to move up and started to move up. We didn't really start to see the Bitcoin consolidation until around about this area, and the Dixie had already started to travel up and break out from its low to its high. It's been about 6%, probably a little higher, and then it did a supercharged rally. Now, I don't think we're going to have a supercharged rally, although this is in its infancy. It's only very early days. This is like the equivalent of probably around here. So if this starts to pick up pace, it will have a negative effect on all markets. It is a delayed fuse. It's the first domino that falls into place when it comes to any kind of consolidation in any other markets. And I believe that we are about to break bullish on all time frames for the Dixie, and that's going to be felt across the board for everybody else. People don't like to hear it, and I understand why. I completely get it. But I'm only making these videos because I'm just explaining my trading strategies, okay, and my plans, right? I'm not one of those moon boys or doom boys or whatever that comes on the internet and just wants to get people to click on stuff just for the sake of a click. It's not really what I'm doing here. I basically sit down in the morning, try and assess the trading environment, work out if there's some money to be made that day, and if there's not, I don't make any. If there is some money to be made later on down the line, I make a plan for it ahead and make a strategy that I can use to then make money out of the market. The market doesn't always give you money. One day you might make a few grand. The next week you might make nothing. You might even lose something. So that's basically what a trader's life is like. You can't squeeze the market to make money. The market will offer you opportunities to make money. At the moment, the opportunity that I see presents itself in a way to suggest that the opportunities will be big, but they're not going to be today. All right? So obviously I make these videos on a daily basis. Everybody wants something today, but that isn't the way it's going to work, right? It just can't always be like that. It has been like that since October. There was opportunities presenting themselves left, right, and centre, and we were making the most of those opportunities. Those opportunities are drying up now, and the next opportunity that we see is a much bigger one than probably all of those put together. But it's not yet. It's telling us that they will be later on. And if you have the patience for it, then you'll be able to take full advantage of that. And so this is the problem I think most people are having at the moment. They just don't have the patience for it. I'm not suggesting long or short or anything, to be honest. I think the price action right now is basically static. And when you have static price action, you're really not really going to be able to do a great deal. You might see it go up today. Someone will go, you missed out. That was 3.5%, you mother. And then, it might go down and say, you were right. It went down 2.5%. He was right. I'm not saying 3.5% to 2.5% is nothing here. What I'm looking for is a larger move that I can take an opportunity on later on down the line. I mean, just look at this price action here. It's just basically sideways. It's just absolutely sideways. We had a little wiggle around, but it's basically sideways. Sideways is not a trading environment, unless, of course, you're running bots. And actually, bots are what I am running, and they're doing all right. Let's face it, they're doing okay. So I'm going to leave it with you there. Boring, but that's the way it is going to be, I think, until we see a more dramatic turn in the market. Whether it breaks out, for whatever reason, it might do that, or if it basically continues to consolidate, complementing the lower high into the new lower low that we will get. So the lower high, obviously, anywhere below here, lower low could be here or below. So that, excuse me, that is the strategy. That's what I'm talking about. That's how you're going to make the money. Well, that's how I plan to make the money. But on a day-to-day, right this very moment in time, I don't think there's much money to be made on it, really, unless you're running bots like me. Right, thanks for watching. I hope you have a nice day. Take it easy.